This month we're going to start with the coronavirus, which is on the front page of every major newspaper and every news story that you'll come across. The issue here is that we don't know. We don't know the answer to just about anything. We don't know how long the virus will last, the impact that it will have. We're not certain about the impact that it'll have on the global economy or on financial markets. And that sort of uncertainty is something that typically financial markets don't like. And over the last week or so, we've seen a fairly sharp drop in equity markets globally as they begin to price in expectations for slower growth, but also the uncertainty inherent in what is a very fluid situation. Our current working assumption is that we'll see a relatively short but relatively painful slowdown in the global economy over the next couple of weeks and months, and that will be reflected in weaker corporate profitability and corporate earnings. Our expectation, in fairness our hope, is that this will be relatively short-lived and that we'll see the impact of the virus begin to taper off over the coming months. We also think that we're going to see a policy response from a number of governments around the world, not just on the monetary policy side in terms of lower interest rates and support in terms of funding, but also on the fiscal side in terms of increased government spending, not just for health, but also potentially for infrastructure as well, as governments try to offset some of the slowdown we expect to see in the private sector. Where that leaves us, we think, is that we're in a period of slightly higher volatility than we've seen in the recent past, but we expect it to be relatively short-lived. And that's a thesis that we're going to continue to test over the coming weeks and months. In terms of client portfolios, we've made some changes, but we haven't really made any dramatic moves. In general, we've increased duration, we've added a little bit of commodity exposure as a diversification, but we haven't made significant changes to our equity weighting, at least across most of the portfolios. We continue to think that in a number of our higher risk portfolios, we have scope to add to our equity exposure if we see the opportunity, given that we've cut equity exposure a couple of times over the last 12 to 18 months. During periods of higher market uncertainty, we think it's helpful to take a longer-term perspective. You'll see over the next few days our strategic asset allocation assumptions. This is something that we do every year, and it looks out 10 years to think about the expected returns across a range of asset classes. During periods of market volatility, it's always tempting to make quick decisions, but history tells us that it's often not the right choice. We'll continue to monitor our client portfolios carefully and make whatever adjustments we need to manage the overall risk of those portfolios.